Good evening, traders. Welcome to BCR's Market Wrap-Up, where we break down the key movements shaping the financial markets. Let's take a closer look at what's driving the dollar, crude oil, and gold. First up, we've got the US dollar. We expect a continued weakness in the US dollar, with the euro emerging as a strong alternative, making the dollar more sensitive to negative US shocks. The euro-dollar long target is extended to 1.08 to 1.12 and the pound-dollar to 1.33, supported by European fiscal developments. While a technical correction to 1.063 is possible, dip buying is expected. Powell's calm approach reassuring markets amid tariff uncertainty, signaling a stable economy and anchored inflation. His clear stance providing direction contrasting with the volatility of tariff policies. While markets remain wary of the economic impact of tariffs, the outlook of growth remains steady. Up next, we've got crude oil. Crude oil hit a 4-year low last week, but rebounded as Trump's tariff U-turned spurred short coverings, and talks to resume Iraqi Kurdistan oil shipments failed again. Concerns over OPEC production increases and a potential supply glut weighed on prices, but fears may be overblown, given the risks of reduced Iranian output due to US sanctions. While Trump's push for lower oil prices could ease inflation, it may also hurt high-cost US producers, slowing production growth. Despite last week's sharp drop, Friday's rebound suggested the sell-off was excessive, with Brent crude potentially recovering to 73.5 a barrel. Next up, we've got gold. Gold's path to 3,000 may be bumpy, with tariff-driven risk sentiment and reduced gold flows into the US pressuring prices. COMEX London spreads have tightened and logistical bottlenecks have eased, leading to consolidation around 2,800 and 2,850, a buying opportunity. Despite short-term selling pressure, central bank demand remains strong, with over 1,000 tons purchased annually for 3 years. US inflation, driven by tariffs and wage pressures, may push the Fed towards easing, supporting gold above 3,000 in 2025. The US deficit is projected at $1.9 trillion for 2025, but potential tax cuts and high rates could widen it further, weighing on economic growth. Near-term gold volatility is expected due to US CPI data, tariffs, and possible government shutdown. Well, that wraps up today's evening market outlook. With key data releases and geopolitical developments ahead, the market remains in focus. As always, stay safe and good luck with your trades.